Good morning, everyone.
Good morning, sir.
Good morning, sir.
Good morning, sir.
I repeat, we will be solving question 16, which is asked in the exams today entirely in the live session. So all of you take out question number 16. Do we need to read the adjustments in advance in this chapter?
No, sir.
We can directly make the formats and read the adjustments and make the entries. Is it or not?
Yes, sir.
Okay. So have a look at the question. We'll read the main balance sheet and we will read what is asked in the question. We'll make the formats and we will solve it. Okay. So Bhumi from OP, why your video is off? Start your video. All of you start your videos, okay? Bhumi, unmute yourself. Bhumi, Amin.
Yes, sir.
Read the question, Bhumi.
The following are liabilities and assets of Dev Limited as on 31st March 2019.
Yes.
Liabilities, equity share capital of rupees 10 each, 5 lakh.
So what would be the number of equity shares? How many number of? Yes. Yes,
50,000.
correct. 5 lakhs divided by 10. All of you write down on the left side, 50,000 equity shares will be there. Yes, further.
10 percentage preference of rupees 10 each fully paid, 7,50,000.
So how many preference shares would be there?
75,000.
Yes, 7,50,000 divided by 10, 75,000 preference shares will be there. Further.
12% debenture, rupees 100 each, 8 lakh.
So how many debentures would be there?
8,000.
Yes, 8 lakhs divided by 100, 8,000 debentures would be there. Further.
Outstanding interest on debenture 96, creditors 54,000.
Further asset side.
Then goodwill 2 lakh, land and building, plant and machinery, patents and design, investment, debtors, cash and bank balance.
What does
Profit and loss.
What does this profit and loss account indicate? Bhumi.
Accumulated loss.
Very good. Accumulated loss. Asset side means it is accumulated loss. Assets always have debit balance. So 7 lakhs of P&L account on asset side means it is accumulated loss.
Loss.
Is every one of you clear with this? Any doubt in it? Is
No,
everyone
sir.
clear with this?
No, sir.
No, sir.
No, sir.
Okay, very good. Bhumi, unmute yourself again.
Yes, sir.
Further read it.
It was decided to reconstruct the company. The following scheme of reconstruction was prepared and it duly approved.
Bhumi, is this reconstruction external or internal? How will we identify?
Sir, reconstruction and new company નામ નથી આપ્યું. New company.
એકદમ સાચી વાત. ન્યૂ કંપનીનું નામ, નવી કંપનીનું નામ નથી આપ્યું. Very good. New company's name is given, then it is external reconstruction, and new company's name is not given, then it is internal reconstruction. Is every one of you clear with this? This is an internal reconstruction question. All of you?
Yes.
Okay. In exams, you must not get confused. If the new company's name is given, then it is external reconstruction. If the new company's name is not given, then it is internal reconstruction. Yes, read it further. Last sentence.
As general entries, prepare capital reduction account and the balance sheet of Dev Limited after the reconstruction of the company.
Yes, everything is asked. Journal entries also, capital reduction account also, and balance sheet also.
Balance sheet.
So all of you make 1.5 page format of journal entries, 8 to 10 lines format of capital reduction account. Do it fast, everyone. I'm giving you 2 minutes time. The question, okay? I'll ask you the adjustments one by one. So listen carefully. You have to answer it to me, okay? Vaishali Jha from Nizampura, unmute yourself.
Yes, sir.
Read the first adjustment.
Equity shares of rupees 10 each were reduced to denomination of rupees 5 each fully paid.
What do you mean by 10 each?
Equity shares are of rupees 10 means face value of equity shares.
Old face value. You have to be very specific. Old face value is 10. What do you mean by denomination? Denomination also means face value. Okay, Vaishali?
Okay.
And what is 5?
New face value.
Yes, new face value means the face value has been changed. How much do they sacrifice?
Rupees 5.
Rupees 5. They sacrifice. That will be transferred to
Capital reduction account.
capital reduction account. Very good. Is every one of you clear with this?
Yes, sir.
Okay.
Yes,
Yes,
sir.
Vaishali, unmute yourself and tell me the journal entry.
Equity share capital account rupees 10 account debit.
Equity, all of you write down equity share capital in bracket rupees 10 account debit. What amount, Vaishali?
5 lakh 50,000 into 10.
Correct. 50,000 into old face value 10. So 5 lakhs. Further,
Equity share capital account rupees 5
yes,
account.
share capital old face value account debit to equity share capital new face value account. So to equity share capital in bracket new face value, that is rupees 5 account
50,000.
amount
50,000.
2,50,000.
Yes.
50,000 into 5, 2,50,000. And what else?
To capital reduction account.
Yes, whatever they sacrifice will be transferred to capital reduction account. What amount?
50,000 into 5.
Yes, remaining 50,000 into 5, that is again 2,50,000. Very good, Vaishali. Mute yourself. Being equity shares of rupees 10 each reduced to rupees 5 each. Is everyone clear with this journal entry and doubts?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. Now, Heta Patel from OP Road, unmute yourself.
Yes, sir.
How will we do the posting in capital reduction account?
On credit side,
To capital reduction means capital reduction credit side. What should I write?
by equity share capital account.
Opposite account by equity share capital account. And what amount?
25,000.
2,50,000.
2,50,000.
Yes, amount of capital reduction, that is 2,50,000. Very good, Heta. Mute yourself. Did you all understand the posting, everyone?
Yes, sir.
Yes, sir.
Anyone having any doubt in this, raise your hand. Anyone who did not understand the first adjustment or journal entry, raise your hand. Okay, everyone is clear. Now we take up with second. Vaidehi Shah from Kareli Bagh, unmute yourself.
Yes, sir.
Read the second adjustment.
10% preference shares of 10 each fully paid were reduced to 10% preference shares of 10 each. Rupees 6 paid up.
What is 10?
10% old face value.
Fully paid up. And again, what is 10?
Face value.
So is the face value changed or not?
No.
Fully paid up means only paid up value is changed. From 10 rupees, paid up value is changed to 6 rupees. So
Yes.
face value is not changed here. Paid up value is changed means face value is not changed.
Not changed.
Okay. So what is the amount they are sacrificing? From 10, the paid up value is decreased
4.
to 4
Six.
rupees they are sacrificing. That will be straight away transferred to capital reduction without changing the face value.
Face value.
Okay. Did all of you understand that here face value is not changing?
Yes, sir.
Yes.
Face value is not clear why face value is not changing. Raise your hand who is not clear why face value is not changing. Everyone is clear? Whether you unmute and tell me the journal entry.
Sir, the share preference share capital account debit.
10% preference share capital account debit.
4.
Yes.
75,000 into 4. 3.
Yes, 4 rupees what they are sacrificing. And you
Sacrificing.
all can see 75,000 preference shares are there. So directly 75,000 into 4 will be transferred to capital reduction. So 75,000 into 4, that is 3 lakhs.
3 lakhs.
And which account will be credited?
Capital reduction account.
Yes, straight away to capital reduction account because face value does not change. So to capital reduction account 3 lakhs. Being preference shares of rupees 10 each fully paid up. Reduced to rupees 10 each, 6 paid up. Did everyone understand this? Did everyone understand this journal entry?
Yes, sir.
Yes.
Yes.
Anyone having any doubt in this journal entry, raise your hand. Okay. Nandini Mahida from Subhanpura, unmute yourself. Nandini Mahida, yes. How will we do the posting for this?
On capital redemption account on credit side
Capital
by
reduction means capital reduction on credit side by
preference share capital
by 10% preference share capital account. What amount?
3 lakhs.
3 lakhs. Correct. Mute yourself. Did everyone understand the posting in capital reduction account? Any doubt in this?
No.
All are clear with this?
Yes.
Yes.
Anyone who did not understand the posting, raise your hand. Okay. Now we take up with adjustment number 3. Manav Tolani from Pratapnagar, unmute yourself.
Yes, sir.
Read adjustment 3.
The 12% debenture shall be converted into 14% debentures of 75 each, The debenture holder also agreed to forgot that interest outstanding on debentures.
What is 75?
75 old face value. Oh, sorry, new face value.
Yes, very good. 75 is the new face value. So here also face value they are changing, because you all can see in the balance sheet old face value is 100 and now they are being reduced to 75, means 75 is the new face value. Also, earlier company was giving 12% interest. Now the company will be giving 14% interest. So interest is also changing, rate of interest. So what journal entry we will pass for this?
The 12% debentures account, rupees 100 account debit.
Just a minute. All of you write down 12% debentures with old face value, that is rupees 100 account debit. What will be the amount?
1 minute. 8 lakh into 100.
8,000.
8,000 into 100. Sorry.
8,000 into 100, 8 lakhs. Okay, 8,000 debentures into old face value rupees 100. So 8 lakhs. Further,
To 14% debentures, rupees 75 account.
debentures are 14%. So instead of 12%, we will write to 14% debentures. And yes, in bracket, the new face value rupees 75 account. What amount?
6 lakh. 8,000 into 75.
8,000 into 75 rupees, that is 6 lakhs. And
To capital reduction.
to capital reduction account, what amount?
8,000 into 25.
Yes, 25 rupees what they are sacrificing will be transferred to capital reduction account, that is 2 lakhs. Very good, Manav, mute yourself. Being 12% debentures of rupees 100 each converted into 14% debentures of rupees 75 each. With this journal entry, is everyone clear with this journal entry?
Yes,
sir.
Any doubts in this? Anyone having any doubts, raise your hand. One more entry is there in this transaction. After passing that, we will do the posting. So, Navang from OP, unmute yourself.
Yes, sir.
Yes, what about this debenture holders agree to forego the outstanding interest on debentures? What will be the entry for that? The debenture holders agreed to forego or sacrifice interest outstanding on debentures. Navang, unmute yourself again. You are not audible, Navang. Try again. I think some problem at Devanshi from OP Road, unmute yourself.
Yes, sir.
You tell me what will be the entry for this debenture holders agree to forego the interest outstanding.
सर कैपिटल रिडक्शन वाला वो नहीं बोलना है.
Posting we will do after passing one more journal entry because it's in the same transaction. So what will be the entry for this part? The debenture holders agree to forego the interest outstanding on debentures. What will be the entry for this? They have sacrificed interest outstanding on debenture. What will be the entry for this? Devanshi. Devanshi, not able to understand this entry? Yeah.
Yes, sir. हाँ.
Keep yourself unmuted. I'll explain you. Okay. Keep yourself. Unmuted. Parth Shastri from Nizampur, unmute yourself. Parth. Parth, you are not audible. Divya Malodkar from OP Road, unmute yourself. Divya Malodkar.
Yes, sir.
Can you tell me what will be the entry for debenture holders agreed to? Divya, what will be the entry for debenture holders agreed to forego the interest on debentures? Are you all attending my lectures, video lectures?
Hello.
Hmm?
I can't hear you, sir.
Yes. Devanshi,
Hear you.
Yes, sir.
are you attending the video lectures?
Yes, sir.
So you are not clear with this journal entry?
Today.
Priced debentures.
सर डिबेंचर में थोड़ा डाउट.
Keep yourself unmuted. Okay. Dwani Dave from Subhanpura, unmute yourself.
Yes, sir.
Yes, what will be the entry for this?
Debenture interest account debit to capital reduction.
Yes, so simple. Devanshi, Vedehi, sorry, not Vedehi. Who else was there from OP? Unmute yourself. Raise your hand. Whom did I ask it? From OP Road, other than Devanshi? Okay. Devanshi,
Yes, sir.
they sacrifice means whatever is the interest amount, 96,000 will be transferred to capital reduction. Did you understand this?
Yes, sir.
So outstanding interest on debentures, you will reverse, it's a credit balance. Suppose it, you will reverse and debit, and they sacrifice it, so it will be credited and transferred.
Capital reduction.
Did you understand this entry or not?
Yes.
Are you able to understand the things from the video lectures? Are you sure?
Yes, sir.
Okay. All of you write down the entry outstanding interest on debentures account debit to capital reduction account, 96,000. Who else was there from OP Road whom I asked the question? Raise your hand. Who could not answer this to me? Okay, outstanding interest on debentures account debit to capital reduction account, 96,000. Devanshi, whom did I ask? You remember?
Sir.
Divya. Divya.
Divya.
Divya, unmute yourself.
Yes, sir.
Do you understand this entry, Divya?
Yes, sir.
Okay, they are sacrificing the interest, so interest we will reverse and debit and will transfer it to capital reduction.
Reduction.
Did everyone of you understand this entry?
Yes.
Yes, sir.
Yes, sir.
Yes.
Yes, sir.
Anyone having any doubt in this, raise your hand. Being interest foregone by debenture holders or waived or sacrificed by debenture holders. Okay, being interest foregone or waived or sacrificed by debenture holders. Abhishek Raval from OP, unmute yourself.
Yes, sir.
Tell me the posting of third and fourth, both the journal entries. How will we record in capital reduction account?
In capital reduction, sir.
Yes.
Sir, capital reduction का credit side पे.
Credit side, what will we write by? From third entry, what will we write by? Abhishek, what is the name of opposite account?
Debenture. 12% debenture, sir. By 12% debenture.
12% debentures account. Okay, opposite account is to be written by 12% debentures account. And what amount should I write? Abhishek? What is the amount of
2 lakhs.
capital reduction? 2 lakhs. Okay,
2
amount
lakhs.
of capital reduction account will be opposite account. So amount of capital reduction 2 lakhs. Same way, tell me from the next entry, how will we record in capital reduction entry number 4?
By outstanding, sir. In capital reduction.
By outstanding interest on debentures And what amount?
Again, sir. 96,000.
96,000. Very good. Mute yourself.
Yes, sir.
Now, next adjustment. Khushali Pathak from Subhanpura, unmute yourself.
Yes, sir.
Start your video.
So my video is on only.
Now it is off. Now tell me the read the fourth adjustment, Khushali. Khushali, read the fourth adjustment.
Fourth adjustment. Land and building and investment to be brought up to the present market value of 6 lakh and rupees 3 lakh respectively.
What is land and building in balance sheet?
So land and building 4,50,000.
Now 6
and
lakhs. So what will we do?
so the amount of land and building has increased, so we'll transfer it to
Capital reduction.
reduction
What amount?
capital.
Difference amount 1,50,000 we have to transfer to capital reduction. Okay.
Yes, sir.
What is the value of investment in balance sheet?
So investment 1,75,000.
And now it is
3 lakh.
so here how much is the increase by profit?
1,25,000.
Here also increase, so profit of 1,25,000 will transfer to capital reduction. What entry will be passed? Fourth adjustment.
So capital reduction account debit.
No, we are not writing off the asset. We are transferring the money to capital reduction. It's a profit. The value of assets is increasing.
Oh, sorry, sir.
So what will be the entry?
Land and building account debit.
Land and building account debit. What amount?
1 lakh.
1,50,000.
Yes, sir.
Then
Investment account debit.
investment account debit. What amount?
1,25,000.
1,25,000 investments profit. And then
To capital reduction account.
to capital reduction account. What amount?
2,75,000.
Are you watching the video lectures?
Yes, sir.
Are you able to understand?
Yes, sir.
Okay, whenever there is an increase in the value of assets, assets account debit to capital reduction. Is everyone clear with this journal entry?
Yes, sir.
Doubts in this?
No doubt.
Anyone having any doubts, raise your hand. Being increase in the value of land and building and investments. Being increase in the value of land and building and investments. Nihal from P. Pratap Nagar, unmute yourself, Nihal.
Yes, sir.
Posting, how will we do the posting in capital reduction account from this?
Capital reduction credit side.
Capital reduction credit side.
By land and building.
By land and building account.
1,50,000.
1,50,000.
By investment.
By investment account.
1,25,000.
1,25,000. Yes, correct. Mute yourself. So I hope everyone is clear up till here. Now, next adjustment. Adjustment number 5. Twinkle from OP Road, unmute yourself.
Yes, sir.
Start your video also. Yes, tell me, read adjustment number 5.
The reconstruction expense amounted to rupees 25,000.
What will be the journal entry for reconstruction expenses? You are not audible. Twinkle, you switch off your video and answer. Maybe there is an internet problem. You switch off the video and answer it again. You are not audible. No, still you are not audible. I am muting you and unmuting you again. You are not audible, Twinkle. Twinkle, unmute and try again. Twinkle, unmute and try again. She is not able to. Sakshi Patel from OP, unmute yourself.
Yes, sir.
What is the entry for reconstruction expenses?
Reconstruction expense debit to capital reduction.
Are you watching my video lectures, Sakshi?
Yes.
So this is very wrong what you have said. It's not correct. Keep yourself unmuted, I'll explain you, okay?
Yes, sir.
Faisal from Subhanpura, unmute yourself.
Yes, sir.
Tell me the entry.
Capital reduction to bank.
Yes. Whom did I ask just now from OP? I told you to keep yourself unmuted only now. Sakshi Patel, unmute yourself.
Yes, sir.
Reconstruction expenses are expenses, debit all expenses and losses. So capital reduction account debit. Okay.
Okay, sir.
Capital reduction now we are using in paying the money. We are not having any profit. Now it's an expense, it's a loss. So debit all expenses and losses, capital reduction account debit for reconstruction expenses, amount 25,000. And we are paying the money. So cash goes out, credit what goes out to cash and bank account. Did you understand this entry, Sakshi?
Yes, sir.
See that you watch the video lectures carefully, okay?
Yes, sir.
Being reconstruction expenses paid. Being reconstruction expenses paid. Now, Rutvi from Pratapnagar, unmute yourself.
Yes, sir.
What will be the posting for this?
Capital reduction debit side.
Capital reduction debit, so debit side, what will we write to?
To bank account 25,000.
Yes, to cash and bank account.
Cash and bank account 25,000.
To cash and bank or bank account 25,000. Correct. Mute yourself. Then Dishita from Subhanpura, unmute yourself. Dishita Patel. Read the sixth adjustment, last adjustment.
From the balance available, the director decide to write off goodwill, debit balance of profit and loss account, and patents and designs.
What will be the entry for this?
Capital reduction account debit to goodwill accounts, profit and loss account and patent.
Yes, goodwill 2 lakhs, profit and loss 7 lakhs, and patents and design 1,50,000. Very good, correct. For writing off the assets, the entry is capital reduction account debit to the assets written off. And all of Dishita, will we finish the entry or leave a space to do the posting? Then we will get some more amount.
Sorry, sir.
See, we will write capital reduction account debit to goodwill account. What is the amount of goodwill? Goodwill is 2 lakhs. Then to profit and loss account, what amount?
7 lakhs.
Profit and loss is how much? Profit and loss account is 7 lakhs. And to patents and designs, how much?
1,50,000.
1,50,000. Now I am asking you, will we write capital reduction account debit amount or do we have to do anything else?
Debit amount, I guess.
Yes?
Debit amount.
Dishida, first we will do the posting in capital reduction account and balancing amount we have to transfer where? Whatever surplus remains in capital reduction account balancing amount, where do we transfer it, Dishida?
Capital reserve account.
Yes, so first we will do the posting, and if at all capital reserve is there, there also will combine in this entry, okay? Got it?
Yes, sir.
So first we'll do the posting to goodwill account. All of you write on capital reduction debit side to goodwill account 2 lakhs. To profit and loss account 7 lakhs. Capital reduction account debit means on debit side all the three opposite accounts. Okay, goodwill 2 lakhs, profit and loss account 7 lakhs, patents and designs 1,50,000. Now, in case if any balancing figure remains, we have to transfer to capital reserve and combine in that entry. If no balance remains, then we can finish it off. So, Dishita, what is the credit side total of capital reduction account? $250, $550, $750, $859, $1025, $1125, $1121, is it? Is it 11,21,000? Subtract the debit amounts and tell me the balancing figure. 1121 minus 7, 9, 10, 10, 50, 10, 75. So 47, 46, is it? Deshida, is it 46,000 balancing amount? You all get 11,21,000 and 46,000 everyone?
Yes, sir.
Yes, sir.
Yes, sir.
Transfer to capital reserve account in bracket balancing figure. Are you clear with this? Here we can combine in this entry to capital reserve 46,000. And now write the debit amount. So 2, 9, 10, 10, 50, 10 lakh 96,000.
Yes, sir.
Being various assets written. Being assets written off. So all the entries have been done? Yes. Now total 5, 8, 16, 18, 1875, 1965, 1971, 1971, 1996, and 2996, 30 lakh 92,000, is it? Total. All of you just verify, is it 30 lakh 92,000? Is it correct? Everyone is able to?
Yes, sir.
90,000?
Yes, sir. Yes, sir.
So
Yes,
now we
sir.
have to take the balance sheet, okay? All of you make the format of balance sheet. You all remember the format of balance sheet? Equity and liabilities. Then in equity and liabilities, what is the first thing that will come in balance sheet?
Shareholders fund.
Shareholders fund.
Shareholders
Shareholders funds, we have two things.
And capital.
Share capital and
surplus.
reserves.
And surplus.
Then second heading,
Non-current
Non-current
liability.
liability.
in non-current liabilities, we have
Long-term
Other
bond.
non-current liability.
non-current liabilities, long-term provision.
Long-term provision.
Okay. Then current liabilities,
Short-term
Short-term
borrowing.
payable, short-term
Trade payable.
Other current liabilities, short-term provisions.
Trade payable.
Then in non-current assets,
Fixed assets.
fixed assets,
Tangible assets. Intangible.
non-current investment,
Long-term
non-current assets and long-term advances. And in current assets, current investments, inventory, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. Make the formats fast, everyone. All of you make the formats of balance sheet. Listen carefully, everyone. First note will be for share capital. Okay. All of you write down note. First will be for share capital. Now, all of you see in the previous balance sheet, how many equity shares are there? You can unmute and answer. How many equity shares are there?
50,000.
50,000.
Now in the adjustment, 1 equity shares from 10 rupees to 5 rupees. Okay. In adjustment 1 from 10, were they reduced to 5 rupees or not?
Yes.
Yes, sir.
Yes.
Yes,
Other adjustment from 2 to 6 relating to equity shares. Any other adjustment from 2 to 6 relating to equity shares?
No, sir.
No, sir.
Now in the balance sheet, we will have 50,000 equity shares of rupees 5 each. Okay, new face value is 5. First of all, write down authorized capital question mark.
Yes, sir.
Authorized capital. Who is speaking in between? Authorized capital is not given in the question. So authorized capital will come as question mark. Then issued, subscribed and paid up capital. In that we will have 50,000 equity shares of rupees 5 each. The face value is reduced to 5. So 50,000 equity shares of rupees 5 each. 2,50,000. Is everyone clear with this?
Yes.
Yes.
Now, how many preference shares are there? 75,000. Now, the face value is not changed, but from 10 paid up, they have become 6 paid up. Is there any other adjustment from 3 to 6 affecting preference shares?
No.
No. So like 75,000, 10% preference shares of rupees 10 each. Face value remains same, but comma 6 paid up. Paid up value is decreased. So comma rupees 6 paid up. 75,000 into 6, 4,50,000, total 7 lakhs. Is share capital clear to everyone?
Yes.
Yes.
Second note, reserves and surplus, what will come?
46,000.
Yes, capital reserve of 46,000 from the last journal entry. Reserves and surplus will have only this capital reserve of 46,000 from the last journal entry. Is everyone clear with this? In the existing balance sheet, there was loss, there was no reserves. So 46,000. Then after reserves and surplus, do we have any long-term borrowings? Yes. Debentures are still there. So long-term borrowings.
Yes.
Okay, debentures are not yet settled, they are still there. But earlier we had 12% debentures, instead of that now we have
10%.
14%.
14%.
And instead of 100, the face value is
75.
75.
75.
Quantity seem 8,000 but 75 rupees. So all of you will write 8,000, 14% debentures. Instead of 12%, now they are 14% debentures of rupees. Face value is 75 each, 6 lakhs. Is everyone clear with this? Any doubt up till here? Next, after long-term borrowings, do we have any other non-current liability? No. Then we don't have long-term provisions, short-term borrowings, trade payables also we don't have. Do we have creditors in the balance sheet? Yes. So creditors, we will write 8,54,000. They are not affected in any of the adjustments.
Yes.
Okay, creditors are not affected in any of the adjustments. So trade payables will include creditors of 8,54,000. Okay, creditors of 8,54,000. Then after trade payables, what is the next liability? Do we have any other non-current other current liabilities? Short-term provisions, other current liabilities we don't have. Okay. Now directly tangible fixed assets. Tangible fixed assets. Here what do we have to show for 5 years? Here what do we have to show for 5 years period?
No.
What do we have to compulsorily show for 5 years period?
Return of value.
Yes, return of amount under the scheme of reconstruction. Okay, but there is no return of amount. You all can see that we have land and building whose value has gone up. Plant and machinery is not affected in any of the entries. Is it affected? No. So land and building will directly write 6 lakhs new value. Return off is not there. Only return off is to be shown if at all. So land and building directly the new value from adjustments, that is 6 lakhs. Okay, you all can see here. The new value of land and building is 6 lakhs. And plant and machinery is not affected in any adjustment. So it will remain 7 lakhs as it is. Plant and machinery 7 lakhs as it is. Total 13 lakhs. Any confusions in this? Now, intangible fixed assets, we will have goodwill and patents, and in both the cases, we have to show the return off. So, intangible fixed assets. Goodwill is 2 lakhs minus written off under the scheme of reconstruction 2 lakhs. This we have to compulsorily show for 5 years minus written off under the scheme of reconstruction. 2 lakhs. So outer column nil. Same way, patents and designs also, they are also intangible fixed assets, but we have to show the written off. So patents and designs, 1,50,000 minus written off under the scheme of reconstruction, 1,50,000. So again, outer column nil. Total also nil. Now after intangible fixed assets, non-current investments are also there. Their value is increasing. So directly we will write the new value of 3 lakhs. All of you can see in the adjustments, the non-current investments are of 3 lakhs, everyone. Do you find it? Yes or no?
Yes.
Yes, sir.
Yes, sir.
Yes, sir.
Non-current
Yes, sir.
investments 3 lakhs. Total also 3 lakhs. Then after non-current investments, we don't have long-term loans and advances and other non-current assets. In current assets investments, we don't have inventories. Do we have stock? No, we don't have. Only debtors and cash in bank means directly trade receivables. Okay, directly trade receivables. And they are also not affected in any adjustment, so they will remain same. Trade receivables, that is debtors. Debtors in the balance sheet are 5,75,000. Total also 5,75,000. And cash in bank means lastly cash and cash equivalents. All of you tell me, how do we count cash and cash equivalents from the journal entry? How do we count cash and cash equivalents from the journal entry? Everyone?
Debit balance plus and credit balance minus.
Yes, all the debit cash in bank will add and credit we will minus. First of all, in the balance sheet, 50,000 is there. So 50,000 in that cash in bank, if it is debited, we will plus. But we don't have any debit. So this 25,000 we have to minus. That's it. So 50,000 minus 25,000, how much balance will remain?
25,000.
Okay, there is no debit and there is only one credit, so that we have to minus. So are all the 9 notes clear to everyone?
Yes, sir.
Yes, sir.
Let's put it in the balance sheet, fill in the blanks.
Yes, sir.
Share capital note number 1, 7 lakhs. Reserves and surplus note number 2, 46,000. Total 7,46,000. Long-term borrowings note number 3, 6 lakhs. Other non-current liabilities, long-term provisions we don't have, total 6 lakhs. Short-term borrowings we don't have. Trade payables note number 4, 8,54,000. We don't have short-term provisions and other current liabilities, total 8,54,000.
Mommy. Sila po inapunta.
Mute yourself. Who is this? Mummy. 7, 13, 21,
22 lakhs.
22 lakhs.
Yes.
Now fixed assets, tangible fixed assets, note number
13 lakh.
13 lakhs. Intangible fixed assets, note number 6, nil. Non-current investments, note number 7, 3 lakhs.
3 lakh.
Other 2 items we don't have, so 16 lakhs. Current investments,
Inventory.
we don't have. Trade receivables, 5,75,000. Cash and bank 25,000. Short-term loans and advances and other current assets we don't have. Total 6
6
lakhs.
lakh.
16 plus 6, 22 lakhs. Manav Patel, are you still there?
Yes, sir.
Money difference?
Sir, cash and मैं 50,000 ले लीजिए कैश एंड